And the point I wanted to make is the bank knows all of this about me in some which way or form, but still to this day, yes, we're talking about personalisation and hyper-personalisation, I don't feel like they understand me as much as they should. I mean, hands up here who really feels their bank actually really understands them. So I'm guessing that's a no. So that kind of just then goes into my next one because it's the general consensus, right? So there's a survey that was done by Deloitte and Blend is 14% of banking customers actually think that their bank does any good at personalisation. You know, that's quite a statistic, right? So it's not a lot. And if we look at that compared to other industries, banks rate 4th out of 5. So there's a lot of work that needs to be done. There's a lot of work going on, but things can be better. And then on the flip side, 90% of customers actually want to get personalised. They want that personal touch. So there is that need and that kind of ambition and requirement for it. And then 65% of consumers and customers want it to be easier to find the financial products and services that are relevant to them. We've talked about this just now in hyper-personalisation. What is it? I'm not going to go through all this because we've kind of covered the concept, but I think in a nutshell is that segment of one, you know, getting down to understanding an individual, their needs, their ambitions, their financial goals at that individual level. And it's really, personalisation has been around for decades, as we know. Hyper-personalisation is personalising against each and every touch point and each and every area of the customer life cycle. So that I mentioned, you know, as you get onboarded, you know, what's your kind of personalisation there? It should be consistent on your customer management, should be consistent across your collections, across your fraud kind of measures that you get, the fraud protection. So it's really that holistic view and using all the data points from across the organisation to get to that single, what's the right, we are mentioning it a lot, the right message, the right time, you know, in the right way. And these guys are really setting the scene. So the likes of Amazon, Netflix, Airbnb, we all use them daily. They are setting the kind of bar in what is a good digital experience. So banking customers now are not only just comparing against their peers, you know, other banking industry, other competitors in the industry, but also against these guys into how my digital experience should be. You know, the goal is really that one-on-one connected, personalized, in-context experience. And if we look at the maturity, kind of the gains that can be had back in the day, which was all batch and blast, single messaging. We started as, you know, add in a name, then do some rules-based segmentation, which still goes on today, and it's very powerful. We started to get uplifts from like 5 to 10% on conversion rates, all the way up to 20 and 50%. But we've moved into now behavioral recommendations. So this is your propensity modeling, you know, understanding what's the likelihood that someone will take up an offer. It's always been more product-based. Is moving from, I mean, I might make a bold statement here, but my view is between the behavioral recommendation and the omni-channel is probably where most banks sit now. And it's these guys that have gone into this omni-channel optimization, this predictive personalization. And if we can get there as financial institutions, you're looking at 20% uplift on the lifetime value of a customer. So it's really powerful. It's really an opportunity for banks to kind of change strategies, you know, put the customer at the front, you know, kind of break down silos, break down politics to start getting that material gain. So I'm just going to actually put these out. So personalization, again, competitive advantage, we mentioned it earlier. The more personal you are, the more engaged your customers will be, the more they're going to re-engage with you. Getting that engagement. Give me 1 second. I think it was the steak. It's lovely. Differentiation is, once you've got that engagement, is differentiating. Okay, how do I differentiate against my competitors? The more I feel like my bank knows me, the more I'm going to stay with them. The more I'm going to tell my friends that these guys know you as an individual. That then builds trust, as we know, as we mentioned earlier. And once you've got trust, you've got loyalty, you've got stickiness. And the major market forces here that are enabling hyper-personalization to start to happen properly. are these areas. The digital transformation, you mentioned it earlier, there was an awesome presentation earlier about digital transformation, but that's accelerated. Everything's more digital, there's a lot of investments, a lot of strategies. The promise of cloud is scalability, fail fast, spin things up, build applications quickly, not have to deal with legacy systems, these old legacy systems that are sitting there, your mainframes. This is why the fintechs are doing so well in leaping the advancements within the traditional banks, because they don't have that legacy debt. Cloud is a big thing to get that scalability. Enterprise AI and machine learning, so that's, even to this day, I'm not sure because it does keep changing. I heard that only 23% of models make it into production. I mean, that's still not a big number. So there's still a lot of work to do there, but there's a lot easier methods and quicker, faster, better, more governed, more transparent ways of now deploying models and deploying and changing them quickly and monitoring those changes. So that's another thing that's driving. Business composability is, it's really the concept of taking your digital transformation inward into the organization. So breaking down silos, having that coordination across business units, being able to build assets, models, applications, Lego bricks that you can start sharing and utilizing across the business. So that's another thing, is kind of breaking down the enterprise into silos, into one holistic kind of ecosystem, really. Customer expectations we mentioned, and then applied intelligence. So applied intelligence is what I'm going to dig deeper into. So applied intelligence really is the concept of marrying your human with your technology. So it's really getting that combined intelligence to derive insights off data and make these behavioral recommendations and personalization to the customer. So it's really that scalability, that enterprise-wide intelligence. And if we go into this slide now, so this is effectively applied intelligence across the customer lifecycle. Again, it's all about your data, getting that data from whether it's streaming, mentioned earlier, streaming, batch processing. I need to go and fetch some third-party data. I need to enhance it with home affairs data, whatever it may be. Then running your analytics and machine learning on that data, deriving these insights on this and optimization techniques to really get to that point of, I've got something that I want to do with. But if you don't do anything with your data and your models, it's then, it's kind of irrelevant. So you need to action that data. So being able to action that data in a fast, effective way with the use of business rules, orchestration layers. So you could have a number of different decisioning across the organization, and then being able to do the process orchestration about what talks to what and what you need to do, whether you need to build models or call a model, etc. And then also on the actions page is the ability to communicate. So once you've got that action, you made that decision, how do you get it to the customer? Omni-channel, WhatsApp, etc., having those journeys. And then the outcomes piece is really, once your system's running, your kind of personalization in a sense is running, is understanding what's happened, being able to simulate. And this is a big thing we're seeing in the market is the simulation element. So I have my decision services and all my offers and next best offers running across the bank. What would happen if suddenly the interest rates changed dramatically, or there was another pandemic, or I wanted to change, if we go to lower level, I want to change a model. I want to change my strategy, kind of change my credit policy. It's taking a production copy of that data, the kind of decisions that you're making, and then being able to simulate that effectively in real time, and then taking that to the business to make quick changes. So that's giving it's almost like a real-time champion challenger. Normally you put things in production, you've got to wait, 3-4 months, was it any good? In this sense now, with the capabilities out there, is to simulate that in real time. If it works, then quickly change it through and give the business users that kind of capability to deploy quick. And then this applied intelligence really is covering all these different use cases, marketing, originations, etc. And I want to dig deeper into some of the examples. So driving engagements and loyalty is your next best offers. So this, fundamentally, there's this ability to use transactional and behavioral data, whether it's real-time or batch. So we've got customers in the US in the US that are run billions of, analyzing billions of transactions per month to find that delta. What has happened in this customer that's changed from yesterday or the day before? Has a life event happened? We mentioned it earlier, has he just got a big deposit? Can I pick up that this person's got children? And so on and so forth. To pick up these real deep nuggets in the data to then make a decision, inform the decisioning layer to then execute on that to the customer, get that real personalization that's in context in my lifestyle now. Simplify streamline and onboarding, like Encino and the guys, it's this digital onboarding is really streamlining that, having pre-approved credits, making the onboarding process, down from months down to weeks and to days. And then broaden and deepen customer relationships is your customer management, pre-approved home loans, pre-approved credit offers, pre-approved auto loans. The ability now to run a kind of process on customers and find out whether get some bureau data, whether they've applied for credit elsewhere. So you might see that they've applied for a home loan at another provider, or they've applied for a credit card at another provider. Do you then make a choice to do some credit scoring on your side, put it through some pricing optimization techniques, and then send a pre-approved offer to them? So it's really those kind of things is understanding the behavioral differences of what's happened from yesterday on your customers. Partner with customers in difficulties is about collections. Again, you can kind of start identifying whether an individual's not had a paycheck for 2-3 months. Rather than their car loan goes delinquent, take some actions to help them. Send them a message to say, hi, would you like a payment holiday? We understand that you might want to talk to us and potentially restructure your loan. So again, that's more on the other side of giving that customer that empathy, giving that customer that knowledge that you understand them and you're not just there to sell products and make money off. Some examples of applied intelligence. We've got Westpac in Australia, APAC, New Zealand. This is a story from New Zealand. So they're using applied intelligence. Originally, they started in collections and then credit, and then they've now put it across their enterprise. And they really went from being a account-based kind of focused organization to a customer-based. And there's an example here. I think it was early last year, a cyclone was hit New Zealand. Obviously, lots of people affected, lots of people, out of work, they have to rebuild their homes. So they quickly refined their collection strategy and their policies, and then sent all these people kind of this payment holiday. We understand you're in trouble and strife. It's really giving them that engagement, that empathy on the situation they're in now. And just on the collections alone, they saw like a 25% increase in engagement because they were giving individuals the treatments that they needed that was relevant to them. 40% cost reduction. So they didn't, by able to automate a lot of the collection strategy, they didn't need reams of call center agents phoning these guys, chasing for payments. And that even increased the rehabilitation rates by 10%. And then the other side of the pond, the Bradesco brain. So this is the largest bank, one of the largest banks in Brazil. They've got a massive load of customers, 74 million customers. They have a lot of cool different pieces of technology across the organization. So they've got data streaming, they've got simulation capability, they've got optimization capability. They've got all these different parts that make this brain. And they're really doing, I think there's 150 different initiatives they're running at one time with all these different decision service that is centrally managed. And they've seen like a 15% increase in credit utilization, 65% increase in digital channel authorization, so the whole onboarding, originations, 50% increase in revenues, and a 41% increase in delinquency. So it just goes to show it's hyper-personalization. Yes, it's still not there, but it is being done to quite a mature degree as we stand now. And then my last slide, so really just some strategies that we could potentially take away is there's no need to rip and replace. So the concept of applied intelligence is really to augment your back end and your front end systems, is to integrate with your existing core banking processes. It's really to provide that layer of abstraction and the kind of intelligence and brain to feed into these systems. It's kind of that glue that holds it all together. And then start with a specific use case. So we have a lot of customers here and globally that they typically start with credit risk and originations. So we start with one use case, get that right, make that onboarding, make that journey, make that experience, quick, fast, better, efficient. And then they start expanding out to collections, to credit line increases, to application fraud. So it's really start small and build out that intelligence layer. And then enterprise-wide thinking, I think we have to get away from politics. There's a lot of politics, still very siloed in regards to product-focused. Start to centralize functions in a bit, centralize analytics, centralize, decisioning, and then have something that's kind of orchestrating that across the bank. But it really does need that cross-collaboration between business units. And then lastly is a well-coordinated, cross-functional roadmap, that collaboration. You need executive buy-in. You need business heads buy-in. It's really a big pivot from the traditional kind of ways we've been working into thinking, okay, if we start, where do we want to be? Where is that hyper-personalization maturity we want to get to? Let's start at this use case, and so on. That was me. I think that was bang on time. Crikey, that was 30 minutes. I thought I did it in like 2. Thank you.
Please, we can grab 5 minutes and do a question if need be. Anyone? Right, Matt, thank
Yes.
you. Oh, front here. Let me give you this.
So, one of the impediments of African banking, especially in the asset creation, has always been credit scoring.
Yes.
It's been very difficult and very elusive. Apart from South Africa, most of Africa don't have a unique ID system that you can trace the individual consumer for you to be able to provide a credit scoring on their behalf.
Mm-hmm.
What innovation is Fair Isaac doing to help the broader continent for them to be able to slowly emerge in their transformation process by really trying to improve their asset books? Because most of the asset books that they are creating right now, there is an inherent risk because they don't have a complete credit profile on, the consumer, both from the individual perspective and even on corporates. Is there any technology in a pipeline that is utilizing other than the traditional European American format of using social security numbers or using national ID numbers for you to be able to really create a holistic credit process to evaluate the consumer?
Yeah.
In
the
continent?
It's a great question, and it's a tough one. But there's two. We have the Fico score. That's obviously a score that's used from a lot. I think it's like 40 countries around the world. I'll have to check on whether African ones are using that. So I'm not entirely sure. But that's something that can help determine a credit score of the customer. But what we've done in Australia, I know it's not Africa, but it's a similar kind of concept because they don't have credit bureaus in Australia. So is that real transactional, taking all the data fees, transactional, a lot of it is your telco data. That's quite important. It's taking all these different data points and then building these models, and we can build these consortium models, and we've done it in the likes of, to mention Australia, where we've taken a team in, linked all these bits of data together and built a score at an individual level. But it is a tough question. It's a tough thing. We can have a chat on it after, but it can be done. But yeah. Yeah.
In certain markets, that penetration of mobile smartphone is pretty good. Is that a way that you can use that metadata from the use of that mobile technology
Yes.
to develop a credit profile that financial institutions can rely on to do lending?
Yeah, that's something and I'm not sure where's MTN. That is and we were just chatting about this earlier. There's so much synergy between telcos and banking. It's getting that kind of data points together, really. Yeah, I'm going to have to park on that one, to be honest. But thanks for the question. Let's have a chat on it after.
Thank you, Matthew.
Thank you.
Super.
Thanks very much.
A round of applause. A hand for Matthew Bray.